We've got SIS India that has reported PAT at levels of 68.4 crore rupees, and that compares with 108 crore rupees in the comparable quarter a year ago. Revenue from operations grew to 2,430 crore rupees from 2,157 crore rupees in the year ago quarter. We're joined by the management. Rituraj Sinha, Group Managing Director of SIS India, is joining in. Thank you so much, Mr. Sinha, for taking the time. Just want to understand how do you account for the decline in profits, the lower margins during the quarter compared with the year ago quarter? You facing significant pressure on the margins, and that's considering that you had a reasonable uptick in the revenue for the quarter.
Well, thank you firstly for having me on the show. Let me use this opportunity to clarify that the same quarter last year is not truly comparable, because if you look at the results, last year we had a very significant entry on account of the one-off COVID-related grants that were extended to businesses in international markets like Australia and Singapore. So a very big chunk of last year's 108 crores, as you said, was impacted by that. If you compare normalized level, I think 62 crores is a substantial growth over our Q1 PAT result. And we are clearly witnessing an uptake in revenue. If you compare the second quarter versus Q1 of this year, SIS India business is up 8% quarter on quarter. And even the profitability remains stable. So I guess it's important to clarify that the Q2 of last year isn't really truly comparable.
Okay, then speak to us about the margins. Then we've seen a level of 5.1%. Do you see then that reversing? Do you see the current quarter and the rest of the financial year significantly better? Then do we return to 6 or plus 6?
Yeah, you're absolutely right. Our pre-COVID margin line was 6%. And as of now, we are at 5%. We believe that it will take a few quarters for it to correct and improve and go back to the 6% levels. What's important for us to register here is that the gross margin line of our businesses is not impacted. We are still maintaining the gross margin line. The EBITDA is lower on account of various charges on account of vaccination and also COVID-related one-off items, which hopefully will taper out. And as revenue picks up once again and gross margin remains as is currently, we are very hopeful that we will be at the pre-COVID level of 6% ballpark.
Hi, this is Nayantara here. Touching a little more upon what Alex said, the labor shortage that we've all been reading about and hearing about, particularly in the big cities, the reverse migration that happened on account of the lockdown. How exactly have you tackled with that? Will you really have no choice but give out more hikes, more wages, and won't that eat into your margins?
No, Nayantara, I have a rather different story here. SIS as an essential services provider never really had to shut down operations at any level or scale down operations at any level because of the lockdowns and what happened last year. Resultantly, our workforce has been fairly stable because they had their jobs and they continue to operate as normal as frontline essential services workers. So we are not witnessing any particular labor crunch. But you raised a very important point about wage hikes. I think the government of India and the state governments have not been able to pass through significant minimum wage hikes in the last 18 months owing to the prevailing circumstances in the economy. We believe that as and when that catch-up minimum wage hike comes, it could present a huge opportunity for our sector, both in terms of revenue growth and in terms of profit expansion, simply because our contracts are basically constructed on a back-to-back pass-through mechanism, which basically means that if minimum wages go up, we increase our rates automatically to our customers. That's the way our contracts are. And depending on what our service charges are in that contract, maybe 8% or 10 or 12, 15%, whatever it is, we simply clip the ticket basis the higher cost. So we believe that a catch-up wage hike is on the horizon for reasons you cited, and that will augur very well for SI's results.
Okay. And with offices reopening, and because you're covered under the essentials and all of that, with the offices reopening, are you seeing more demand come back? Shops have restarted. All of that is going on too.
Yeah, absolutely. Like I said earlier, if this is one of the biggest quarter-on-quarter revenue jumps that we have experienced in many quarters. The security business in India witnessed a 7.5% revenue increase compared to the previous quarter, Q1, and the facility management business has registered a 10.5% revenue increase compared to previous quarter. We have a very solid pipeline, getting into Q3. And what's most important is that some of our customers who had downscaled operations, like malls and schools and IT parks, hospitality sector, who had reduced the volume of services they needed, are coming back very strongly. So we have both engines firing. One is the volume recovery in existing clients, and number two is new contracts. So we're very bullish
What do
about
we do
the
next?
Q3. Yeah.
Okay, so that's the higher demand that you have started seeing as well on because of things are just reopening. Is a reopening theme which is playing out. Cash logistics order. How has that business been doing? And I'm particularly asking this simply because it's festive season. This is the time we go out and do a lot of our shopping, indulgent shopping.
Look, the cash logistics business has been one of the most stable service lines that we've had. If I just give you comparable, we March 2020, as compared to March 2020, the month pre-corona, our cash business is reporting monthly revenues of 20% higher, ballpark. So cash business has continued to grow through the 18-month period of COVID. And we generally witness an uptick in Q3, which is basically the Shera Diwali period. And I'm very hopeful that the general mood of the country is going to reflect in cash circulation, more transactions, more cash circulation, especially in rural and semi-urban parts, and that will support the cash logistics demand tremendously.
Okay, so that's been your most stable businesses going forward. Positive commentary there coming in from SIS. But that we're completely out of time. Many thanks for tuning in and joining us today on this edition of The Market. We'll be back same time tomorrow.